Why do only 5% of traders succeed? Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Monday back in Perth. Lots of movement last week in the markets, and yesterday again the markets gave some very big moves. I think we're going to see that probably play out over the week. Monday's range will often expand, and often when we have a weekly range violated, we may see some bigger moves take place as well. Why do only 5% of traders succeed? I think it's really important for retail traders. We talk about a lot of stuff in the videos. I think that the one thing that's very particular to the Forex market is the fact that the banks control 60% of the volume in the markets. And I think a lot of the things that show up in currency markets show up in all the markets, and largely now, especially that there's a lot of algorithmic trading, computerized, program trading. I think that it's really noticeable when you step back and stop approaching things from the traditional sort of retail perspective. Then everything, if you Google trading, you're going to get a few million sites that show you all the same things with technical indicators and moving averages and stochastics and EMAs and everything else. A lot of that stuff works occasionally, but the most important thing to realize with Forex trading is that a lot of the markets, if you go and take some blank charts, intraday charts, doesn't matter if it's 5-minute, 15-minute, I use hourly charts mainly, you will notice that all the gaps get filled, and usually, I look at a gap as if you were in a trade from the last session, whether it was the London close, the US close, the London close, the London Open, whatever, wherever the last profitable trade is, the next day, if you take your daily time frame that you're trading off of and you look at where the last profitable trader got in. So for example, if that was the US Open and the London continued that move, the London close continued that move into the US close, the next day I often will mark off where the level is the trader got in that's profitable. So if I'm using an hourly chart, you'll see a breakout of some sort where there's a profitable trader. And then of course I use my daily highs and lows. It's important to understand, and I've been in so many profitable trades only to watch them come back and stop me out at break even and maybe continue, or in my reckless years of learning, I would hold on to some of those losers and average in, and they would actually in fact continue to run against me because I was caught in a counter trend move, and those moves continued in terms of a measured move beyond where I was in, and my losses were huge. And so those are the three things I look for each day. And when a market breaks new highs or new lows, often that's potentially, it's a trigger for me. It's a telltale sign that depending on how the structure has set up for the day, that move may continue again. So I may look for an entry at one of the opens or closes of the market sessions. Or that may also be an area where one of the biggest trades can occur. So often at an extreme of a daily high or low or a weekly high or low, you will see some of the big moves set up, as we did see yesterday. And so when you see that, you can see how technical indicators will often take you into trades at those critical levels, because according to the price action, those trades will be trending. And that's what's really important. The market makers, the algorithms, they will entice retail traders into participating into these moves that occur in waves, because that's what we're taught to believe. We're taught to chase the trend and to trade with the trend. Well, often by the time that trend is confirmed by our traditional learning methods, that will often be towards the last, second or third end of the move. And when they reverse and turn, they will move so quickly that often you're either trapped, the way that the structure of the trade that you've got into is set up. So it's reversed and now you're already in negative equity. It may not have stopped you out, but now you've got to make a decision to cut it with a smaller loss before it hits your stop, or you're hoping that it's just correcting a little bit and before it continues on to resume its original drive. which is where, again, we're taught to believe that three-touch trend lines, those sorts of things will often give us some good trade opportunities. And that may be truer on longer time frame charts, but when you're using intraday charts, it's really critical to start to identify when a market has turned or when it's potentially turning and reversing against you. So why do I think that only 5% of traders succeed generally in trading? I think there's a whole number of reasons. We talk about this in other videos. I think there's a lot of emotional disorientation towards the markets. They have false beliefs and expectations of what the markets can produce for them in a very fast time frame. I think that they overestimate their skill set. I think they don't understand that the markets will continuously evolve. So you trade one type of setup today, you think you figured it out, it's going to be huge, you're going to trade it again tomorrow, and of course that setup you think is set up to trade again the same way, and it's not, and now you take a loss, so you decide to double up on the next trade, and it's about to hit your stop, and you're frustrated because you just took a loss, so you move your stop or you remove your stop out of the market, and it comes back a little bit and starts to turn around, so you get some more because you want to average in, because now you're convinced that it's going to go and you want to make up for the money that you've already lost. And then it reverses quickly again and stops you out. Now you're really angry. And so you just get back in the market going the other way, in the direction that it stopped you out. And of course the market does turn and starts to go back in the original direction and goes on for a sustained move. But you don't put your stop in place. You're so angry, you hold on, you hold on, you hold on until the pain point gets so big that you experience a massive loss, and you sit there shell-shocked and confused, rapid heart rate, you're breathing, your pupils are dilated, you're not sure what just happened, but you've just lost a significant chunk of your trading account. Have a trading plan. Have an if this, then that scenario written up on your desk each day. Build your playbook. We talk about this in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download it. It's an audio file. Use that as a blueprint to construct your own daily high performance routine. You are up against the brightest, smartest, best equipped, best educated, best informed people in the world in this market. That market is set up to take your money. If you understand that, you know that the odds are significantly stacked against you. So you have to start to peel the onion back and identify what things will slightly start to tip things more towards your side of the coin. Not so much that you have a huge advantage, but that the edge isn't so far away. And keep chipping away at that in little increments until you can start to identify where your best playbook trade setups occur for your comfort level, your time frame, your instruments, whatever they may be. Trade them as small as possible. Get consistent at them. Master those setups. Make sure that you're getting enough of those setups on a weekly basis or a monthly basis to meet your demands. As you get better at that, increase size. Be patient, be disciplined. Understand that one trade a week can be significant enough if you are able to identify and trade those setups to probably provide you with more than enough income. But you have to get really good at them. Every trade you're going to have little things that you could have done better. There's going to be things that you did really well. You've got to try to work on your strengths and build on them. Build on your strengths. Minimize any weaknesses that may be there and keep sharpening the sword and getting better. Why do only 5% of traders succeed? Probably because only 5% of the traders stick around long enough and do the work necessary to get better, to get to that level of being consistently profitable. And probably the 1% are the ones who are patient enough, disciplined enough, and specific and prepared enough to sit and wait until the best trades come along where they're prepared to take a position in the market with significant enough size and trade that out to its fruition to maximize the benefit out of that trade. Take that and use it again to do the same thing going forward. So hopefully you got some value out of today's video, traders. Keep getting better. Only you can do the work necessary. It's 90% is going to boil down to your ability to implement and execute your trading plan with your best trading setups, as long as you have an edge. So stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.